Good afternoon, everybody. Going to get started with the before market close video and daily market update here momentarily. It's Thursday, July 28th. Hope you're well. And we had a pretty big day in the market, so we're going to jump into it here pretty quickly. We'll give it another 30 seconds or so for people to join us. All right, going to get started with today's before market close video. It's Thursday, July 28th. It's Rod with POW Group. Hope you're well. We had a pretty big day in the markets today and in MJ as well. Tilray had earnings. I did a video earlier on that today. If you haven't seen that, you can check that out. But essentially, one of the most important numbers came in today, and that was the GDP numbers. And you can see here that last quarter came in at negative 1.6%, and then this quarter over quarter, negative 0.9%. And the technical definition of a recession is 2 quarters back to back, so consecutive, of negative growth. So you can see here we are, quote unquote, in a recession if you go by that definition. If you go by what the White House is saying, they're trying to obviously spin the narrative like they always do, right? They want to control the narrative. They want to redefine what a recession even means. And just like they do with CPI numbers, they kind of water those numbers down. They remove certain key aspects that we all know is very important and crucial. And that's kind of how they are able to mask the CPI and the inflation numbers as well by, again, just kind of tailoring the data to or presenting the data in a different way so that it can not cause a panic, right? I understand they don't want to cause a panic, but you're being disingenuous as well, right? Like you need to be honest with people, and we're not stupid, right? We can all see the prices at the pump. We can all see the prices at the grocery stores. We know that inflation is likely a lot higher than they let on, and they said it was transitory, it wasn't an issue, blah blah blah, right? And here we are. You don't have to be an economic expert to realize that we were probably going to end up in this scenario, right? And if you've been following this channel for a while now, I've been saying for at least a year now that we were going to see massive inflation and big problems down the road. You can't just print, 80-90% of the money supply in the last decade. You're bound, and then obviously with C-19, everything like that, it was just a matter of when, not if, right? And I don't trust any of the governments really as far as I can throw them. And I'm looking after number one, and I don't rely on mainstream media or the government to take care of me or to get my news from them. Basically, I just go and I look at mainstream media and I see what the herd is thinking, right? What do they want the masses to believe, right? And that doesn't mean that you should take their advice at all. Sometimes they're right. Like if you go on Jim Cramer, sometimes he's right about certain things, but he's most often than not wrong. And I mean, everybody's like that if you have an audience and, you're working in the financial markets, and he's basically an entertainment show, right? So, you kind of have to look at that, take it with a grain of salt. But at the end of the day, he's right about some things, but he's wrong about a lot of things too. He's like a contrarian indicator because he's tailoring to the masses, right? So generally, I look to do the contrarian move. And taking a look at the estimates here, we have some key earnings after hours. So this is going to be the next major catalyst, which is Apple and Amazon earnings right after the bell here. In terms of estimates from analysts on Apple, we have 82.59 billion projected, and EPS looking to come in around 1.16. So we'll see if we can beat those numbers. If we do, which I think we will. I was bearish on Facebook earnings yesterday, and I called that during yesterday's live stream, or the day before, I think it was. I think it was yesterday, right? Yeah, Facebook earnings for yesterday. Just going to bring that up here. Or is it, am I mixing it up? There's been so many earnings this week. It's been insane. Yeah, it was after close on Wednesday. Yeah, so I called it out. I don't know if I didn't do a stream yesterday. So I just sent it out to private POW Group members, and I said that I'm expecting Facebook to miss just based on what the charts were saying, and just based on the overall trend, right? We knew that SPY was likely due for daily consolidation, and it was the most likely scenario based on what the charts were saying. And looking at the broader market, we knew that the broader market was likely going to pull back a little bit, at least in the short term. And then I figured leading into the most important numbers, which was yesterday when we got the interest rate decision, that was the most important thing. So people were de-risking leading into that. And again, I just expected the broader market to really bring down Facebook. Facebook itself was kind of strong, but again, because of that macroeconomic factor and data, that played a big role in it as well, right? And I'm turning bullish on Amazon and Apple earnings. We also had a POW algo buy alert go off on a lot of these names not that long ago. We do that through a private channel in our POW private community. You have to pay extra for the algo alerts, but we also email them out as well for those of you that would rather have it that way. But essentially, I'm expecting a beat like into the short to medium term. I'm bullish, but long term on tech, I'm bearish. Right? I think over the next 2 to 3 years, we're going to enter a very, very difficult period. It's likely going to be the diminishing returns. Not to say that we're not going to see bounces, but I would think that we're going to overall trend down over the next couple of years on a lot of our tech names and the broader market, really, for that matter. But taking a look at the analyst estimates for Amazon, it's 119.18 billion projected, and EPS is forecasted at 0.1279. So again, we'll be seeing what kind of numbers come in, and then we'll likely get a reaction based off of a beat or a miss. And all eyes will be looking on those two here after hours. So we'll be looking to those two to give us direction for the market tomorrow, being the last day of the week. Taking a look at crypto, a lot of 15-minute bull flags out there, but currently forming a lot of, actually we've got about a 15-minute head and shoulders forming here on Bitcoin. And we've got a bit of an equilibrium here on a lot of our other names with the high, low, lower high, higher low tightening up. But more of a 30-minute bull flag likely going on an hourly bull flag. If we take a look at Bitcoin, we didn't break. We lost support by about $12. So technically, we're starting hourly consolidation. This could be a potential hourly bull flag. I'll just draw it out here. So anything over 23,516 is a potential bull flag. Anything over that 0.32 Fibonacci level. And then if we take the measured move, you just take the measurement here from the high to the low, and then you move that out here to the 0.382 fib, and then you look at the measured move based on the low point and the high point, and you put it on the 382 fib, and it's saying we're going to about $25,000 if we confirm that. But in order to negate it, we would have to lose 23,516. Taking a look at the daily time frame, we are bouncing on the daily, and again, Bitcoin and tech stocks continue to be very correlated. And just based on the strength I'm seeing in Bitcoin, trying to continue the weekly bounce rather this week after brief consolidation, we're way back up at resistance now. So the key level to be watching is 24,287. If we get over that, I could easily see a move up to about 25,500, which lines up with EMA 12 there on the weekly time frame as well. Look how far away we got from it, right? From EMA 12 down to where we dropped, we were about 30% away from EMA 12. And right, what the whole idea of the EMAs or moving averages is just ebbs and flows, right? We get extreme to the downside, we get extreme to the upside. But what happens? What's the common denominator? What's the fact what's the constant here? We always come back and retest those moving averages, right? So that's kind of the idea. It's not, like I said, it's just probabilities. It doesn't work out the same every single time, but one could just take a look at that weekly time frame, right, and think, okay, well, we're down 30% from that EMA 12. It's likely just a matter of time before we start to see a pretty big move back up, right? We could still see an EMA 12 and 26 bear cross, which is just when the shorter term time frame comes down through the longer term. It's called a bear cross, and then a bull cross on the opposite side, right? So you can see here when we avoided the bear cross here, and then we continued upward, but now we're at risk of a bear cross on the monthly time frame, which would be the first time in Bitcoin's history. If that were to occur, we could easily see that head and shoulders target on the monthly time frame here down to about 13,000, which also lines up with the 0.618 fib level as well. So things are getting interesting. We've only got 3 days left in this month, though. So I think what we could see is we could see a tightening range into next month. We open with a second multiple monthly inside bar, and then we get the break. Either we start monthly consolidation again, or we break resistance and we start the monthly bounce, and then we have nothing really until about 33K on the monthly time frame in terms of the EMAs. So we could see a pretty big move here. Personally, I think we could see a move up to about 30,000 rather quickly, and then a pretty big pullback after that. But I think there's still a chance that we could go to 13K. From here, I would say it's a 50-50 chance we go to 13K, or the bottom is in at 17K. But I'm, again, I don't have a crystal ball. I'm planning, as I always do, I'm planning for both scenarios, and just being very cautious this late in the cycle. I've got, I've got hedge positions, things like that. So if you do feel over leveraged, or you're having trouble sleeping at night, what you can do is you can look to hedge with a short position on the S&P 500, either a regular short position or inverse leveraged ETFs. So similar to SPY, which is an ETF, which is long, right? SPY goes up 1%, you make 1%. But if SPXS, which is an inverse ETF, goes, if SPY goes down 1%, SPXS goes up 3% because it's 3x inverse. But same vice versa, SPY goes up 1%, SPXS goes down 3%. So you get the double-edged sword there. But as long as you can get on the right side of the road there and the tracks, you should be able to come out on top. And like I said, it's more or less just, for me, hedging those long positions, which are my altcoin picks and my MJ positions. That's pretty much the only thing I feel comfortable going long at the moment. That and Edmonton real estate, which my condo closes today. So happy closing day to me. Looking forward to that. Going to get my keys here in about an hour and a half. Actually, about an hour and 15 minutes going to meet my realtor. So really looking forward to that. Taking a look at the S&P 500. So like I said, we had that daily equilibrium where we had the low, high, higher, low, lower, high, higher low, bear break out of that equilibrium, ended up being a massive bear trap straight into a massive daily bounce. And then we ended up changing the daily trend, confirming the daily bull flag with a break of resistance there at 400.18, which I mentioned a couple of days ago that I was watching for. As long as we held that 0.382 fib, I said the key level to hold is 388.88. We held that level, which we did. And I said if we come up, hold that level, and then we come up and break resistance at 418 cents, then we would confirm the daily bull flag and likely see a pretty big move. And what's happening? Well, we're confirming that daily bull flag, and look, it's coming out basically teed out to perfection, and we're targeting 420 on SPY. So I'm going to be looking to add SPXS. I haven't yet. I'm going to look to add it. I have a tiny bit. That's why I'm holding off a little bit, but I'm going to be looking to add more SPXS just as a hedge position at around 410, and then I might do it again around 420. And then, just de-risk, just scale in. It's kind of the opposite when you're, let's say it's an MJ stock right now and you're dollar cost averaging. Well, you're just scaling in, right? You're just you're averaging in. You're buying every time it drops 10% or something like that, right, from your entry. And it's the same thing when you're shorting, right? You can scale in, right? You don't have to go all short at one time, right? You can scale in and then just get your average down, right? So it's kind of the opposite when you're shorting, right? So taking a look, one thing I wanted to mention, I did sell my mutual funds today. For those that didn't see in the POW Group private community yet, but I did sell my mutual funds. They were in an aggressive growth fund, just means high risk. And that's my retirement money in my RSP. So I'm being very cautious with that. I had a lot of gains over the last couple of years in the everything bubble of 2022. And the last thing I want to do is give back those profits. And I don't want to get greedy either, right? So I was averaging down. I was averaging back into those aggressive funds, and I think I made my last purchase into aggressive growth when SPY was at around 380. So I made about 7% in total on my re-entry there, and now I'm back into a Canadian money market fund. I moved 60%. I'm holding the 40% left that I have in the aggressive growth, and I'm going to be targeting 420 to unload that, the rest. And then just keeping it safe, right? Locking in profit, not getting greedy. It's my retirement money, right? Quote unquote retirement money, but just locking it in. And the market has been really predictable. And that's what's making me a little cautious lately, is because when things are really predictable and it's really easy to see all this stuff play out, it's just a matter of time before a black swan event comes or something that you really didn't see coming, and a pretty big move in either direction could come, right? But I'm ready for more upside, and I'm also ready for more downside. And that's the name of the game, having a plan for all scenarios, right? We don't have a crystal ball, but One would think that we're likely going to 420 from here. We don't have any daily resistance now until 415. And the daily bull flag is targeting 420, so it's looking pretty good. In terms of the dollar, not really much here to report. We did break to a lower low, but didn't see much follow through. The most important thing for me is the weekly uptrend. So if we lose the weekly uptrend, which we are it'd be pretty difficult for us to do this week. I don't think it would happen this week unless we get some kind of a bombshell, right? Again, any kind of black swan event could change things, but we'd have to lose 101.29 on DXY for us to lose the weekly uptrend as far as I'm concerned from here. So essentially we could pull back from these levels another 4.5, almost 5%, and still be in a weekly uptrend. But what I think is the most likely scenario is we come back, we test EMA 12, and then we get a weekly bounce, and then we're at risk of a weekly downtrend. And what I could see is come back down, test this neckline, and then maybe form a type of head and shoulders here on the weekly. We also have this uptrend line, which would line up perfectly for a right shoulder. So that's what I'm looking for in terms of the Dixie. And then other than that, silver having a nice day today, up almost 4.5%. Well, it was 4.5%. Still haven't even seen the EMA 12 and 26 bull cross yet. And then in terms of the daily resistance, we had resistance there at 2020, 20 psychological. Today we got to 1998. So great move over the last couple of days. We were up almost 10%, but what a time to take profit as well. Can even potentially a cup and handle. Usually cup and handles are found at the top of an uptrend though, not really near a bottom. You could make the case that this was an inverse head and shoulders as well playing out. And then the inverse head and shoulders target brings us to about $20. Yep. So we came pretty close to that resistance, like I said, at 2020. And then after that, we don't have anything until 2153 in terms of the daily time frame. But silver bulls making a run for it today. Silver bulls, silver bulls. So we were looking at this one as a community. Yeah, I don't even know how to pronounce this. What is it? Bosch? I think Bosch Health Companies. So I think Rashid pointed this one out, but yeah, this one, talk about some heavy manipulation on this one. Apparently like 75% institutional ownership, but wow, no monthly resistance until 43.97, and we got as low as $5.10. We got down to about 24 on the monthly RSI. And again, what happens when we deviate this far away from those moving averages? We usually come back and retest them, right? We ebb and flow, and usually, again, not telling you to buy, sell, or hold. I'm not saying this is a trade that you should make or not make. It's very, very high risk, so I would err on the side of caution and not use any more than you're willing to lose, especially on a name that's like this. But again, I don't know anything fundamental about the company, so for all I know, there might not be a company in a couple weeks or a couple months or a couple years. I don't know anything about it. I'm just saying if you're looking at playing it as a potential trade, you could play off $5 psychological support. And we also had a bear flag here on the weekly time frame that was confirming and questioning how much more downside we're really going to see. I mean, we got down to 14 on the weekly RSI, right? So again, could see a pretty big move on this one. One way to play it would be to enter with a stop loss below $5. Could even allow a little bit of a wiggle room as well in case we do see more downside. But just on the daily time frame, we have no resistance for about over 110%. So yeah, massive move likely coming on this one, but very, very high risk and high reward. But wow, talk about destroyed. Taking a look at some of our individual names here, we've got VEGA, META, and FVRR on the decline today. On the bull list, we've got WNRS, JSDA, and MVMD. And then we'll just do a quick check-in on Apple since we do have earnings after hours. Strong daily uptrend. Look at this. Low, high, higher, low, higher, high. Stair step. This is what you want to see. This is the ideal scenario for any stock when you're looking to make an entry. So here, let's say you were looking to enter here. You could have played off of that support, right? Oh, I missed the move, but we came down. You said, okay, well, we still didn't confirm a daily uptrend. We broke the daily downtrend once we broke resistance here at 137.34. But is that enough for you to enter? Some people would say, yes, it was. I'm a little bit more aggressive. Some people are a little bit more conservative. So maybe they were saying, you know what? I'm not going to chase the FOMO. I'm going to wait for a consolidation period and a pullback, which we know is usually inevitable. And then I'll look to add on a higher low since we didn't confirm a daily uptrend. We broke the daily downtrend, but we still didn't confirm a daily uptrend. So based on forming that daily higher low, you knew that we were likely going to see a higher low based on the amount of room that we had, right? We could, from the top there, we could have dropped roughly, we'll do a quick measurement here. We could have dropped about over 10% and still just be looking for a daily higher low. And then if we take a look From there, you could have set your stop below the low there. So a stop below 129, which was support. We got as low as 133. So essentially you could have risked, if you were a little bit less aggressive and more conservative, looking to play it safe, you could have entered there and then put a stop under the support level, which was about 3.5%, 3.25% away. And then that would have been a lot less risky. But if you were really aggressive, you were entering here when we lost the daily downtrend, when we broke that. But then if you were really conservative, you could have waited until we broke 143.49. And then once we broke 143.49 here, what day was it that we broke it? Right here on July 6th. Okay, we confirmed the daily uptrend, and you could have entered on this daily higher low. That's another way to do it, but you could have waited for the higher low, followed by the higher high. As soon as we confirmed that higher high on July 6th, that confirmed the daily uptrend. If you just entered there, then you would have saw another 10% of upside, right? So it would have been essentially 10%. And then this way would have been 18%. And then if you entered at the absolute low there, which is what some people refer to as catching a falling knife, that's 22%. So the difference is more percent, right? More reward versus more risk, right? So you're rewarded for the same for the extra risk that you're taking on, right? So it doesn't matter, which one you pick, really. It's just what works for you, right? What are you more comfortable with? Do you not like that feeling when you're averaging in and going aggressive? Would you rather be more conservative and enter on a higher low, or are you super conservative and you need to see a daily uptrend, right? It's all about what works for you. There's no right or wrong way, only the way that works for you. In terms of Amazon, not as stair-steppy, but you can see here this was strong resistance, and then once we broke above that and confirmed the daily uptrend, so we had the low, high, higher low, lower high, equilibrium type pattern, low high, higher low, lower high, higher low, bull break, got over that resistance, which had been proving to be a brick wall, and then here we are coming back down, almost back tested it, but you could have entered here when we broke and we closed the candle above it. So you could have entered here on July 18th. Even if you just entered there, that would have been about 10% of upside, right? So again, nice swing trades all around. But at the moment, we're in a daily uptrend. Key support will be 114.53 going forward, and key resistance will be 125.50. But it's looking pretty good, closing near the high of the day. We still got a little over an hour and 7 minutes left, so a lot can happen before the end of the day. But looks like we have a nice lower wick right off a fib level as well, and we're targeting resistance at 125.50. All right, so Tilray at the high of the day, starting the daily bounce, no resistance until 416. We had key support there at 308, which I mentioned, and we got as low as 317. So another great trade to be playing off of support. You could have set your stop below the low, and then the 52-week low is at $3. So if you were a little bit more conservative, you could have, or aggressive, you could have set your stop under that. But I did a video on this, so I won't go too much into that. For the sake of this video. On the bear list, we have WIB, XTRX, and Love. On the bull list, we have TLRY, FAF, and Huge. Going to get into the private POW Group ticker requests. If you do have any ticker requests, place them inside the community. And the exchange, please and thank you. Yeah, on the bull list, we have Tilray, Fire and Flower, and Huge. In terms of American MJ on the bear list, we have FIT, BMMJ, and TAUG. On the bull list, we have BEV, IIPR, and NBEV. Taking a look at MSOS, daily consolidation, number 3 in a row. And like I said, we had tons of room right from that daily consolidation beginning. We had 14%, a little over 14% that we could drop to form a daily higher low. So the most likely scenario is it's no longer a daily bull flag anymore. So the most likely scenario is a type of equilibrium like I was just showing you in Amazon. And then you see here low, high, higher low, lower high, higher low, and then a bull break eventually. Or we could just come straight down. That could happen as well, but that's not the most likely scenario. The most likely scenario is where we tighten up or we come down and we go straight up. That could happen as well. But the most likely scenario, I would say 60% chance is an equilibrium. 20% chance we break up, and then 20% chance we break down. All about support and resistance and risk versus reward and probable odds, right? What makes the most sense? That's the one thing that I've learned about trading and investing, especially in investing. They're two very, very different things. But we could be due for a monthly bounce next month as well on MSOS. We know it's coming soon. We know the gain train's coming for MJ, and we know that we're due, and we all know we're very deserving of a decent rally here. And like I said, we have no nearby resistances on the monthly, really, on any of our MJ names. So that's something that we can get excited about. The great thing about these low numbers in this brutal bear market means that we have a great time to accumulate, great prices to stock up for the long term. And the more we pull back, the bigger the bear market means the bigger the bounce usually to the upside. And the great thing about prices being down 98% is, on average, it's 80 to 90% in the MJ space right now. The great thing about that is how much more really are we going to see in terms of downside before we start to turn the ship around, right? Likely not too much longer before safe banking, I think, is like the most likely scenario that we should see. All right, jumping into the POW Group ticker requests. So the first one we have is SHOP. I'll take a look at SHOP here real quick on the TSX. We did have a buy alert go off as well on the POW algo alerts. So buy alert, this went off yesterday. Medium and long-term bullish evidence on Shopify. And this would apply, that's on the, which exchange is it on? NYSE? Yeah, it's on the NYSE, but it would apply as well to the TSX as well. But started in the daily bounce today, just like a lot of our names, and next resistance is up at 52.41. But we're pretty choppy at the moment. Again, it's really going to be dictated by Amazon and Apple earnings here in about an hour, a little over an hour. We should see that. But we knew that we were likely going to see a pretty big move on SHOP at some point soon, just based on how crushed we were on the RSI. And we are starting to see this hidden RSI, bullish hidden RSI divergence, where we've been trending up from those low points with higher lows and higher highs, and we're breaking to a new higher high, even though the price has been in a steady weekly downtrend and lower high and lower lows. So we're starting to see this rounded bottom here now, and we could be due for a pretty big move on terms of the weekly time frame. We're looking at resistance there, like I said, at 52.41, and then after that, there's a little level here at 62.13, and then a major level at 94.73. We also have EMA 26 at 69.27. So I think we can see a pretty big move. If we manage to close this weekly candle over EMA 12, that'll be the first time since the major plunge that we experienced from the all-time highs. This will be the first time. So watch for a weekly candle close over EMA 12. EMA 12 is sitting at 49.54 on the TSX. And if we can close a weekly candle, the weekly candle this week or next week over that, or any week for that matter, if we can close a week over that, that'd be another trade to potentially take as well, right? Because of how suppressed we've been, and we haven't closed above it since November 22nd. And then if we do, we can likely expect to move up to EMA 26 based on the lack of resistance, which would be up at 69.27. So if we just take a look at what the potential would be, that's about, from just entering even on a weekly candle close above that, that's about 37% of upside just waiting for a weekly candle close above that, right? Or you could look to enter now and scale in and then set your stop below the low of this pullback at 38.63. Multiple ways you can play it. Just depends on how much risk you want to take on. Taking a look at the weekly time frame though, we had the 10-week moving average of 44.76, which we are currently above, and we had a bull cross on the MACD and the stochastic on the weekly as well. So this is looking really good. If we can close tomorrow over the 10-week moving average there at 44.76, I could easily see a move up to, well, that first resistance level there at 52.41. But realistically, there's no reason why we shouldn't see a pretty big move up to around the $60, $70 area. So watch EMA 12 on the weekly and watch that 10-week moving average. We could see a bear cross though. You're seeing a bear cross of the 50 weekly and the 100 weekly moving average, but we did see quite a bit of pullback. So one would think that we might come back up, kiss the 200 weekly there around 94, and then get the bear cross, and then we enter even more downside, another leg down potentially. It's not looking good when these moving averages cross each other. When the shorter terms come down through the longer terms, and it's on the weekly time frame, which means it's even more macro. That's not good. That's called a death cross on the daily time frame. On the weekly time frame, it's even worse. But again, we did pull back quite a bit from those highs, right? If we take a look at how much we're actually down, just go to the weekly so it's easier. But if we take a look at how much we pulled back from the all-time highs, we're down over 80%, right? So it's not just MJ that's volatile. It's not just crypto that's volatile. Shopify, everybody's, Canadian poster child stock, dropped over 80% as well from November. If we take a look at the daily time frame, we had the death cross back here. It actually was flashing back in May of last year, and we didn't cross. So that's another fake out, right? So could we see the same thing on the weekly time frame? It's possible where, we fake out and then we come back up and then we get the cross, right? That could potentially happen, right? So you have to be aware of that. And like I said, down 80%, over 80% from November. Are we likely due for a pretty massive rally? I think so. And then we get this weekly bear cross is what I could envision. But if we take a look at the actual death cross, it occurred back here in the 3rd and 4th week of January. So toward the end of January, if you just exited there, the price was still at around 109, factoring in the split. So it was at around 109 when that occurred. Between 100 and 120, it just bounced around there. If you just exited there, that would have saved you a ton of downside, right? Over 50%. So that's why this technical analysis stuff works sometimes. If you're just looking at one indicator or one trend or one particular metric, well, that's not always the greatest representation of the state of affairs, right? It's the state of the market, state of the stock, state of the crypto. If you're looking at multiple things called confluence, when you have 8 or 9 or 10, or the more indicators or the more patterns or the more trends that you have in a certain, thesis, or in a certain, if you're looking at a certain odds of something, a situation or scenario playing out, the more confluence you have, the better, right? So if you have 100 bullish indicators, right, all saying the same thing, that's better than one bullish indicator, right? And that's what we were seeing back here is all stocks, all cryptos, all risky assets and risk on assets. We're seeing the exact same thing, right? And the more confluence, it was just like high tide. Everybody was calling me crazy for saying this thing was going to $1 USD soon. We hit as low as 137. And I said it wasn't me who said it was going lower. It was the charts, right? Don't shoot the messenger. I'm just relaying the message. I said, this is a weekly bear flag. And we had weekly bear flags all across MJ. And then CGC hit its weekly bear flag target and then some. So I said, okay, well, that increases the odds that high tide's going to see the similar thing play out. And then sure enough, we lost key support there at 173. And then after that, we confirmed the weekly bear flag. And look how close we are from coming to my target. We're only 25% away. And I had a ton of people reach out to me today who said, you called it. I totally thought you were full of crap. And here we are. And it's not me saying we're going to $1. I'm saying the charts are saying we're going to $1. Does it mean we're going to $1? No, the bottom could be in here at 137. But were you prepared for both scenarios? That's really, in a nutshell, what it's all about. All right, all eyes on Apple and Amazon earnings here after the bell. Do a quick check-in on SPY here before we end it. Right at the high of the day. Guns are blazing. My aggressive growth is going to switch from aggressive growth into money market here at the end of the day. So I want to see it close near the high of the day as possible. Get a big of a bounce as possible here leading into power hour. But essentially the way mutual funds work is they only execute at the end of the business day. So at the end of the trading day, that's what the prices lock in and sell at in a mutual fund. It's not like an exchange traded fund, right? An ETF where like SPY, where if you buy it at that price at that exact time. Whereas whereas a mutual fund, you only find out what the value is at the end of the day after the market closes, right? So as of market close on X day, that's the price. So a little bit more risky that way, like to try to actually time it. So you wouldn't really do day trades or anything like that in a mutual fund. But again, it's in my RSP, so that's my retirement account. I'm just being very, very cautious. Like I said, I'm expecting a move up to 420. People might say, well, why did you sell at 405 if we think we're going to 420? Well, it's because we're in a bear market and we're seeing a pretty big move. And this is money that I just made a ton of gains off of since March 2020 lows. And I don't want to give back any of those gains. Plus, I'm just remaining patient this late in the cycle. And then what I'll do is I'll look to add more SPXS. So I'm being patient adding SPXS, which is the hedge position, and my bet that the broader market is going to go down, right? It's a short position, a form of short. Checking in on Bitcoin here as well. Not at the high of the day, so not as strong as SPY currently at the moment, but we are potentially coming up and forming a right shoulder here on this 15-minute head and shoulders. So we'll keep an eye out for that, but it is a potential hourly bull flag as well. So we could see another leg up just based on how strong the S&P 500 is. I'd say the odds favor that we are likely going to see another leg up into Bitcoin. And if we close strong in the broader market and we see a positive reaction and bull reaction and an earnings beat on Amazon and Apple, that's just going to only add fuel to the fire. Checking in on the POW Group private community. See if there's any other requests or if there's any news that just broke. And I might make this video public after the fact, but you can see here we have the POW bot. So it does general news, real estate news, Forex news, crypto news, commodities, MJ as well. And we have our POW algo alerts, which we also email out as well. But you can see here, this is all news that is automatically gathered through the POW bot algorithm. So we also have the algorithm for the algo alert service, which is a separate membership than the actual POW membership. So they're all on the website. You can check out powgroup.ca if you're more interested in learning more about that. But yeah, really cool. We have all the automated one-stop shop for all of your news. And like I said, it's very informative. Actually, I saw Sean in our group today posted the Tilray earnings, and PowBot beat them by, I think it was 1 minute. We'll just go back here. Where is it? There's a lot of news, and you can tell the news has just been really picking up. Actually, I didn't share my screen. Sorry, I realized I just hit end stream there, but you can see this is all the different channels. We got the POW algo alerts, and then like I said, we have all these different channels for different news related. Switzerland medical MJ law goes live August 1st as well, so that's something to keep an eye out for. That'll be extremely bullish. There's talks about Canadian regulations and things like that dropping as well. But yeah, I was just showing you. So Sean this morning at 8:14 a.m. put out the Tilray Brands news, and then I said PowBot beat you by 1 minute. So you can see here today at 8:13 a.m. If we go here and click on that, it'll take us to the actual things. You can see here in POW. It was in general news. That's what happened. It ended up showing up in general news, but then I copied it over there. But yeah, pretty funny. Beat him by 1 minute. You almost got there first. All right, going to end it there. Thanks again for joining us on the Pursuit of Wealth, everybody. Have a great night. If you could smash the like on the way out, I would appreciate it. And going to go get the keys for my new condo here momentarily and try to get another video. I want to do a video on Canaro Biotech as well. But with that being said, hope you have a great night, and all eyes on Apple and Amazon. Talk to you soon.